Alright guys, welcome back to the channel. We need to go over this liquidity crisis that is hitting everyone. The hedge funds, even you possibly. It is here and it is here to stay. How does this affect AMC and the Moass? That's what I mainly want to talk about here in this video, as well as go over a couple quick articles and what some people are saying, what's going on with hedge funds. We're going to touch on a lot here in this video. It's going to be very valuable. We're also going to talk about where the technical picture sits for AMC, because if you guys didn't notice, AMC was up 1.68% in after hours with a pretty decent move right after hours started. So let's get into this video. If you guys find value out of it, hit the like button and subscribe to the channel. Get your free stocks down below in the description with Weeble, Moo, and Public, and come join the trading community with me and with the group over there. Link down below in the pinned comment. So first and foremost, with this whole liquidity situation, you guys got to realize that over the past 2 years, we were in a much different landscape than we are in right now. Margin rates are going through the roof. Shorts are covering. Not an AMC, but they're covering elsewhere. Why? Because the cost to borrow rates are higher now. As you have noticed from the Ortex data, on pretty much any stock we look at, cost to borrow rates have went up since the Fed has raised rates. That's going to happen. It's harder and it costs more to short stocks. At the same time, like the S&P 500 index, I've noticed the short interest has went down a couple percentage points during this whole rally that we have seen, and it's been a pretty ferocious rally straight up. You have the 10-2 treasury spreads that are heading into the floor, looking like we're going to head into recession here in the near-term future, and we are only getting started, ladies and gentlemen. The Fed is going to raise rates up to 9 or 10 times this year, with 2 double rate hikes that are starting to be priced into the markets. If we go to Fed Rate Monitor tool, this is something you guys can do for yourselves. It changes on an intraday, daily basis, so make sure to check that out while you guys are trading. But you can see the probability of a 0.5% rate hike at the next Fed meeting is 72.7%. This has changed dramatically. Before the Fed's meeting, it was like a 3% chance of seeing a 0.5% rate hike. And after the Fed meeting, what happened? The market started to rally. So even though we're now pricing in a 0.5% rate hike, the markets have rallied 15% from the bottom. It's kind of crazy. And if you guys have not seen my last video, definitely go ahead and check that out. But if we actually take a look at the definition of liquidity crisis, that's what I've been saying. Liquidity crisis, liquidity crunch for a very long time. But it says, a time when cash resources are in short supply and demand is high. During a liquidity crunch, businesses and customers are charged high interest rates on loans which are more difficult to obtain, also known as liquidity crisis and credit crunch. And that's what you're starting to see right now. Look at mortgage rates. They now hit 4.95%. Just last week, they were 0.5% lower than that. So you're definitely seeing the liquidity crunch, the liquidity squeeze that is taking hold of pretty much everything. Now it says, at the root of a liquidity crisis are widespread maturity mismatching among banks and other businesses, and a resulting lack of cash and other liquid assets when they are needed. Liquidity crisis can be triggered by large negative economic shocks or by normal cyclical changes in the economy. So that's kind of what we just seen, right? Negative economic shocks. Russia invaded Ukraine. Oil prices, commodity prices are going through the roof. There's talks about a possible famine that could come out of this, because that's what happened the last time we seen a super cycle in commodities. So the situation is not looking all too good. Markets have not priced that in. And really the only thing that I think prevents hedge funds right now from feeling all of the pain is the fact that the markets have now rallied again. Are they going to stay up here? Probably not. Probably not. They're probably going to go much lower than where we were at. There's even articles like from Forbes saying this: hedge funds and the dead black swan. talking about the term Black Swan was popularized by Nassim Taleb in 2007, just before the 2008 financial crisis. He argued outlier Black Swan events are impossible to predict because of their extreme rarity, yet have catastrophic consequences. He further advised we must all assume a Black Swan event is possible and try to be ready. For investors, portfolio diversification may offer some protection when these outlier Black Swan events occur. So back to the hedge funds. Financial experts were expecting 2022 to be a year of high inflows into hedge funds, especially after the strong 2021 performance across all hedge fund strategies. Yet, here we are in mid-March with events of the last 2 weeks leaving even some top Tiger Cubs down over 25% year to date. These are hedge funds. Tiger Cubs equals hedge funds, down 25% year to date. Goes on to talk about the probability of a Black Swan event, that they are not always very probable, but it looks like 2022 is going to be an unpredictable year. That's the long story short to the rest of that article. But it does say sometimes it is better to just get out of the way, which is what hedge funds did in response to U.S. stocks making big swings. There was an immense de-risking as hedge funds took off leverage to protect capital. Prime brokers Goldman Sachs and Morgan Stanley reported cuts to both long and short positions in a nowhere-to-hide market. Goldman Sachs noted that in the first week of March, hedge funds sold tech and consumer stock holdings at the fastest rate for any 5-day period in the past decade. Hedge funds are arguably some of the smartest liquidity money, and in recognition of their current posturing, I stand invested, paused on the sideline, searching for a lovely white swan. So, not looking good for the hedge funds that are in the markets that are trying to play this back and forth. They obviously don't have a clue exactly what they're doing, so most of them are down 25% year to date. And that is causing a lot of liquidity stress to the banks, to other hedge funds. It's also going to cause that cost to borrow rate to go through the roof as well. Now, when does this liquidity crisis actually come to a head? When does all of this really start to matter for stocks like AMC? Well, it starts to matter when you start to get deeper into this rate hike cycle and when the markets ultimately do crash. When the markets crash and you see shorts covering, it's not because the stock price of AMC went up too much. That's not what it is. It's because hedge funds got margin called and they don't have the money to service those margin calls, so they have to pull out that collateral from their AMC short position and use that elsewhere. Because obviously, like we've seen in the past week or two, hedge funds have not covered anything in AMC stock. You had some people, some YouTubers, saying that this move was shorts covering. Unfortunately, sad to say for those YouTubers that stuck their neck out on a line that were proven wrong, this was not a shorts covering kind of move. It didn't happen. It did not happen at all. You're not seeing any reflection of the short interest changing over the past 2 weeks. It's virtually where it was 2 weeks ago, and even higher than it was during February 28th, the settlement day. So, yeah, to those people that were saying, shorts covered, we never seen one return share day larger than the borrowed shares. So hedge funds are actually taking this opportunity to load up on their short positions. Ain't that a bitch? We'll see. So, as far as the Ortex data, it's looking like 20.78% short interest of free float. Current shares that are sold short of 107.08 million. Cost to borrow max of 3.54% and utilization of 100%, as well as cost to borrow, it says 1.39. It's really 3.54. And then days to cover at 2.89. It's also going to be very hard for shorts to get out of their short position in the same way that they tried to back here in June, considering the days to cover is about double where it was even back here in June. And mind you, we only seen about 6 to 10% of the short interest actually get covered back in June. So when they're actually forced to cover this time around, it's going to be much, much different. Now, something else I do want to point out as well, I told you guys there's a lot of sporadic things we got to get into here in this video. Adam Aaron did put out this tweet last night. It says, I was highly confident that AMC skills could quickly right the ship at Highcroft, HYMC. We just did. Eric Sprott and AMC invested $56 million. Now we raised a breathtaking $139 million more cash equity. $195 million in total in only 2 weeks. Calm seas, smooth sailing ahead. So good for the business. and obviously good for AMC's investments. I'm sure just mentioning AMC like this will shoot the price up of the stock to incredible levels. And for anybody that is mad with what Adam Aaron did, think about it like this. If they had put $27 million to pay off a 10% bond coupon, obviously AMC's interest rate would have been $2.7 million per year. Well, it would take 30 years to make it make sense to pay off the bond rather than invest in Hycroft, and to see Hycroft go to 5% of its assumed valuation that it could get to. So would put Hycroft around $3 to $4 per share. If Hycroft does that, it'll be better than paying off that debt by 30 years. So definitely a good move on Adam Aaron's part, and that's probably why the markets have reacted very favorably to it. That's why a lot of investors have decided to put their money back into AMC stock. Now, you could see a lot of headlines as well about, look at this. Coatue hedge fund investors try to redeem $250 million but can't cash out in full. Hedge fund with 45% returns drawn into DOJ probe of short sellers. Let's actually take a look at that one real quick. Anson has unwelcome distinction in a U.S. Justice Department inquiry examining the tactics used by short sellers. Yeah, ouch. Not good, buddy. 45% returns. Yeah, that's going to draw some attention here. So, a lot of other news that is coming out as well. But let me just tell you, the liquidity crunch has only just started, and the pain is still yet to come in the markets. I wish I had better news in that sense, but you're even seeing the margin debt has not went down since January. It actually went up $6 billion, and that helps to fuel this whole liquidity crisis even more. Now, if we do take a look at the Stocko Tracker data for next week, obviously this is not a full breakdown about AMC heading into next week. That video will come out tomorrow. But for next week, you do see about 40,000 calls that are in the money, 71,000 calls that are out of the money, 1,400 puts that are in the money, and 56,000 puts that are out of the money. It's not going to be a huge week for options, but it does not matter what is really on the option chain necessarily heading into the week, because you see a lot of people that FOMO into these options once the week starts, right? People will buy a lot of weekly options, and they get into those usually on Monday, Tuesday, and Wednesday. So that's where you can see a lot of that gamma activity actually happening, because the closer to expiration, when people are buying options, the more the market makers have to go out and hedge those positions and start to buy the stock. Now, if we're actually taking a look at the technical analysis, this looks very, very good, guys. We have come up from $12.90 per share to $22.35 per share at the high. Now, what do you notice in here? It's pretty much a straight trend line to the upside. We've had slight down days, but it's looking pretty damn good in my personal opinion, right? You see the trajectory here. We've been holding up very, very well above 1850. We've come down a couple times, like right here, hit 1879. Right here, went briefly under 1850, shot straight back up. Went down a little bit, shot up, came back down, and then we seen that move here in after hours up, 1.68%. Now we're sitting at $20 and 60 some cents, right? So it's looking really, really good at the current moment. The fact that we are going up rather than down is very, very positive. Now, the key level we have to break out above is still $22 per share. We have got rejected off of that level many, many times, but this is a textbook consolidation phase, and it looks like we just seen the break to the consolidation here in after hours. If we can get above that, if we can get above these key levels on Monday, it's going to be home sweet home for the next potential big rally. And I don't know if the liquidity situation is at a head where you would actually see shorts get forced to cover and force share liquidations, but if that is the case, you're talking about the Moass here. So that's going to be very exciting. I hope you guys are excited as well, but there could be some downward pressure on the markets coming tomorrow. So I think that's going to do it for this video. We covered a lot of different things here in this video. I hope you guys found value out of it. Just another look at the technicals though. The MACD is looking very bullish right now. Gap has widened a lot. The RSI still around overbought levels, not quite over those levels yet. Watch the 100-day moving average at $24.66 per share right now. The Bollinger Bands, that's going to be a key level, but we have remained above that, and it's still curling up and has a lot of ways to go before it actually gets up to our price. So looking very, very good right now, riding the top end range of that Bollinger Band. If you do see the Moass actually start and short start to get squeezed, then I would expect to move up to $33 really, really shortly. So that is going to be all. Thank you guys for tuning in. Hit the like button, subscribe to the channel if you guys have not already, and also get yourself those free stocks down below in the description with Moomoo. Sign up, deposit $1, get 3 free stocks as well as an additional free share of NEO upon your deposit clearing, and come join the trading community. Link down below in the pinned comment. Thank you for watching, and I will see you in the next one.